In today's video, we're going to be talking about the spot price of silver and gold, why the stock market has been falling, and the Federal Reserve soon beginning to taper. What's going on, everybody? Welcome back to another video. Hope you're doing well, feeling great, and enjoying freedom. It's a great day to have a great day. Today, I wanted to talk about both silver and gold, but I also wanted to talk about the stock market because stocks have been falling, but we also have to talk about the Federal Reserve soon beginning to raise rates and start to taper. We're going to get into it, but really quick, just in case you're new, make sure to subscribe for daily videos, subscribe to my second channel for weekly videos, get yourself some DYDSS merchandise to help support the channel. I'd really appreciate it. We got the limited edition Christmas line helping raise a little bit of funds and awareness for St. Jude Children's Research Hospital. It's for a good cause. Link in the description. And of course, go and get your 2 free stocks by downloading Webull. The link will be in the description. For every 3 friends you refer, you get a spin on the Webull wheel where you can win 1, 2, 3, 5, 7, maybe even 10 free shares of Apple worth almost $170 each right now. Webull link in the description. So today is Tuesday, December 7th, 2021. The spot price of silver as I'm filming the video is $22.36. It's down 2 cents or down 0.09%. Spot price of gold is $17.80.30. It's up $1.80 or up 0.1%. And of course, the gold to silver ratio is in the 79-to-1 range. But again, that's as I'm filming the video, not as I'm editing, posting, or as you're watching. So head on down to the comments and let me know the date and time you're viewing the video and what the current spot price is for you. I'm always curious. Okay, so in today's video, we're going to be talking about the silver and the gold. But before we can even get into the money, I think we also have to quickly talk about currency, the stock market, and what's going on at the Federal Reserve. At the moment, due to the new sickness variant, Omicron, stocks that typically fall during times of economic hardships are, you guessed it, falling. Airlines, cruise lines, retail, entertainment stocks have been steadily moving in a downward direction for the last about week and a half.
Oh no, I hope I don't fall.
Out of the fear that this Omicron is going to take over and everything's going to shut back down again like what we saw in early 2020. However, during the crash we saw almost 2 years ago, tech stocks went absolutely crazy for obvious reasons. Everything had to be done online for that period of time. However, tech stocks this time around are falling as well. Except for Apple, though. Apple is doing very, very well. Once again, go and get your free share or shares by downloading Webull and referring 3 friends. Link in the description. But anyway, this time around, even tech is having a tough time. And this is mainly because of the Federal Reserve's decision to begin tapering sooner than expected. In 2020, the Fed lowered interest rates down to the lowest we've almost ever seen before as a form of economic stimulus. The idea was that if you make borrowed currency dang near free, it would incentivize individuals and companies to borrow more currency, which would allow them to spend more currency, which, considering we have a consumption-based economy that completely collapses like a deck of cards when people are forced to be frugal, lowered interest rates would, in theory, help keep the economy afloat. But what ended up happening is that a lot of money got plowed into the stock market, leading to an all-time high record of people investing on margin, which, by the way, means investing with borrowed money, essentially. I'm going to make a whole separate video on that right there. But it's caused the stock market to appear to do absolutely nothing but go up. All while inflation is at a 30-year high and lasting longer than we were told that it would. And now we have the Federal Reserve acknowledging that inflation is not transitory after all, as previously claimed, and they're now looking to taper sooner than planned in an attempt to hopefully get things under control. You see, originally, the idea wasn't to raise rates until overall employment bounces back, which makes sense considering you really can't raise rates during an unemployment crisis. But according to the last couple of jobs reports, unemployment is on a slight decline. Of course, the latest report shows we missed the expected number of jobs by a lot. It was a complete and total train wreck. That was actually yesterday's video. If you want to go check that out for more details, go ahead and do so. But despite the massive miss, unemployment has declined. And we're getting close to what the Fed refers to as max employment, which is what they've been waiting for before they begin raising rates. And if you look at the market and how much red we've been seeing, you can tell that a lot of people are expecting for rates to be raised soon. On top of course, Omicron fears. You partner those two together, we get some pretty massive red days. But a lot of people are expecting for rates to be raised soon. And when rates go up, a lot of these booming stocks start making their way back down, and it's for a couple of different reasons. One, rates go up for them as well, and two, less people are going to be spending borrowed money, which can eat away at their cash flow. So we've been seeing somewhat of an end-of-the-year sell-off, which is pretty different from most other Decembers. A lot of the time, most years, we have an end-of-the-year rally. This time around, it's a little bit different, and it's for a couple of different reasons. As explained in this video already, rates potentially going up soon, the Omicron variant, this is going on, that's going on, we got the debt ceiling crisis coming up in a couple of days. We were worried about a government shutdown up until just a couple of days ago. That's getting kicked down the road down until February. But point being is that there's a lot of fear, uncertainty, and doubt, especially when it comes to the market right now and the overall health and well-being of our economy and the dollar bill in general. But most years in December, we have an end-of-the-year rally. I personally have been saying for the last 2 months, I think the opposite is going to happen. I think we're going to see more of an end-of-the-year sell-off, and it's for a couple of different reasons. First one being, I think a lot of people are trying to snatch up as many profits as they can. But even more so, of course, I do think people are going to be taking gains, but I think a lot of people are going to be looking for the opportunity to take some losses as well. See, in most other areas, most other ways of doing things, if you sell something at a loss, it's a bad thing. If you sell stocks at a loss, yeah, it's a bad thing, but it can deduct from your gains. For example, it's called tax loss harvesting, by the way, another example of how people involved in business, stocks, and real estate get even more perks. When you lose money, yeah, you're losing money, but at the same time, you're kind of not. And the reason I say this is because let's just say you invest some amount of cash into this stock and then you invest some amount of cash into that stock. This stock over here on the left, you've seen, let's just say, $1,000 worth of gains. Meanwhile, over here, you see $1,000 worth of losses. If you sell them both, those losses cancel out the gains. Ordinarily, you'd have to pay capital gains tax on that $1,000 that you made off of that one stock, but over here you lost $1,000, and if you sell them both, it cancels out the gain and you wouldn't owe taxes. So I do believe that a lot of people are going to be looking for opportunities to harvest tax losses, if that makes sense. It's called tax loss harvesting. If you don't know about that, just do a quick Google search. It's actually pretty interesting, but I personally believe that a lot of people are probably going to be looking for ways to do that before the end of the year, because once again, End of the year means we're at the end of the calendar year, which means we're at the end of the tax year, about to move into a new tax year, which, by the way, the new tax year is the year that taxes are supposed to go up on certain individuals. I think a lot of people are probably going to be trying to pay a slightly lower percent in taxes this year rather than waiting until next year. That's just my assumption. Do with that what you will. But that's just my belief on why I think we're seeing an end of the year sell-off as well, which is also causing less experienced investors, by the way, to become scared and start to panic sell, which is causing even more red, which is causing a lot of people investing on borrowed money to get margin called, which is causing even more red. And I know today's probably a bad example because as I'm filming the video, the market is actually surprisingly green.
We're breaking free!
But for the most part, over the last week and a half, we've seen a lot of red, and that's just simply why I wanted to talk about this today. But all in all, the Fed is not raising rates just yet, and we shouldn't be expecting the raise to just take off out of nowhere. It's going to be done gradually over time. That's why it's called a taper. It's likely going to be over the course of most of next year. It's probably going to be little by little by little over the course of, I'm assuming, probably around the next 12 months. Now, those are just some of the facts, some of what we know right now, but I also wanted to quickly mention my personal opinion on something related to the Omicron variant. As I've explained in previous videos, I am 100% unconcerned. But I think it's worth noting that if the Federal Reserve is even considering raising rates soon, if it's something that's even on the table, if it's something that they're even talking about, if it's worth discussing right now, doesn't that mean that they're also unconcerned? I mean, if the government was actually afraid of this thing, wouldn't it be seen as a threat that could shut everything back down again? Why would we raise rates soon if that was even a possibility? We would go from shutting down in 2020 to lowering rates, only to open back up and raise rates, to then shutting back down and lowering rates again over the Omicron variant. To me, it doesn't sound logical. I could be wrong, but again, I'm unconcerned. Anyway though, away from all that, let's also talk about some silver and gold. You know, originally I wanted to make a video today talking about selling precious metals if need be, like somewhat of an exit strategy video, but that's something that would make more sense to post over the weekend, so I'll save that topic for a future video. But first things first, before we get into the silver and the gold, if you can head on down in the comments and let me know, what are your thoughts on the taper? Do you think rates are going to go up relatively soon? What are your thoughts on that right there? Head on down in the comments and let me know. And now let's talk about some silver and gold, and you can leave a secondary comment later on in the video related to silver and gold, of course. So silver and gold. Like I said, I wanted to make a video talking about selling silver if need be. Now, for the record, I plan on not selling my silver. I plan on not selling my gold. My mission, my objective, my plan is to not part ways with my precious metals. I'm in it for the long term, and ideally I'd like to be in it for life. I could really only see myself getting rid of silver to get more gold, and I could only see myself getting rid of some of my gold to potentially get some land. That's the only way I can really see myself parting ways, and it's not even really much of parting ways, it's actually more of trading up, which is already what I'm doing as it is, by the way. I'm going to work every day, just like the rest of us, or most of us. I'm trading my time for dollars, as painful as that is to say, as painful as it is to even think about. I'm trading my time for dollars. And then once I'm handed those dollars and I'm done taking care of all the responsibilities that I have to take care of, the bills, the food, the everything, once I'm done taking care of all that, the amount of dollars that are left over, which unfortunately There's not a whole lot. But of the dollars that are left over, I like to take a portion of those dollars and put it into silver. So again, it's part of the cycle. I go to work, I trade my time for dollars. I'm handed those dollars and I trade some of those dollars for some silver. I personally have yet to trade any silver for gold, and I'm for sure not going to be doing that anytime soon because, like I said, the gold to silver ratio is about 79 to 1. That is absurd to me. I will not be trading any silver for gold anytime soon. And ideally, I wouldn't like to do it anytime soon anyway. I'd rather load up on as much silver as I can, hopefully for at least another couple of years before the gold to silver ratio gap really started to close back in. But I could see myself beginning to trade some silver, not all of it, not most of it, not even half of it, just some of it. I can see myself beginning to trade some silver for gold probably when the ratio gets closer to maybe 40 to 1. At 50 to 1, I would start actually planning things out. I would start strategizing. Okay, how much silver am I going to trade for how much gold? What silver am I going to trade for gold? Where am I going to do this? How am I going to do this? What's the process going to be? I would start strategizing and actually thinking about it at around 50 to 1. At 40 to 1, I can see myself beginning to trade just a tiny bit of silver. Just a mere acquisition. Getting a little bit of gold without having to trade my dollars for it. At 30 to 1, that's when I would probably start making some actual worthwhile moves. See, at 40 to 1, I might trade a little bit of silver for a little bit of gold, but at 30 to 1, that's what I consider to be ideal. And I know there are some people out there who say, oh, I'm not trading any silver for gold until the ratio is 1 to 1. Hey, I could be wrong over here, but I don't think that's ever going to happen. In fact, 30 to 1 sounds like a bit of a stretch to me. I think it's kind of realistic. It's probably going to take quite a bit before we actually get to that point, though. And anything smaller than that, whether it's 20 to 1, 10 to 1, 5 to 1, like I said, I could be wrong. I cannot see that happening. It could happen. I've been wrong in the past, and I will be wrong again in the future. This might be something that I end up being incorrect about. And guess what? If I end up being incorrect, I'll say in a video, like I have a handful of times, I was incorrect about this. Silver and gold proved me wrong. I was one of the people who were saying back in 2019 and early 2020 that I didn't think we were going to see silver surpass the $20 mark for years and years and years. That was early 2020. Here we are nearly in 2022. I didn't think it was going to happen until even further down the road. And then when it did, in just a couple of months into 2020, I was the one to say, silver and gold proved me wrong. I'm not one of those people that say, when it does what I want it to do, it's because I'm right and it's because I'm smart. And when it does what I don't want it to do, oh, I'm not wrong, it's just manipulated. I'm not one of those people. If I'm wrong, I'm wrong. I might end up being wrong about this. But personally, I don't necessarily see the gold to silver ratio going to the 20 to 1 or 10 to 1 or 5 to 1 or even the 1 to 1 range. Doesn't sound realistic to me, but who knows? It could happen. But regardless, that's right around the time that I would begin strategizing, maybe making some small moves, some small trades, some small transfers. But at 30 to 1, I think that's almost the sweet spot. And for me, it would work out in my favor anyway, because I got a lot of silver when the ratio was 100 to 1. Of course, I've picked up a little bit of gold over the years. What you see on screen right there, that's just a small handful of my gold. All of the gold that I've gotten in the nearly 4 years that I've been stacking precious metals for have been acquired by trading my dollars for them. Ideally, that's not what I want to do. Right now, when the ratio does not make sense to trade one metal for the other, or trade silver for gold, that is, I'll be trading my dollars for gold. But ideally, that's not what I want to do. I don't want to get gold with dollars. I'd rather get gold with silver. At the moment, that's out of my control, so that's obviously not what I'm going to do. But that's all part of the cycle. That's all part of my plan. Now, I understand we don't live in a perfect world. Things might not end up going according to plan, but that is what part of my plan is. Again, just a reminder, I go to work, I trade my time for dollars, then I go and I trade some of my dollars for some silver. I haven't made it to the next step yet, but when the ratio makes sense, I'd like to trade some silver for some gold, so that later on down the road, I can take some of my gold and potentially, if this is what I still want to do at the time, years and years and years later, trade some of the gold for some land. Use it to get real estate. I can put roofs over people's heads. I can start generating cash flow. And then guess what happens at that point? The cycle continues, except I can potentially, again, in a perfect world, I can eliminate trading time for dollars from the equation. See, if cash flow is being generated, I'm not trading my time for the dollars. I'm just receiving the dollars. And then I can take those dollars and rinse and repeat. Get some silver. When the ratio closes back in again, because the ratio is always fluctuating. We've seen it go from 60 to 1 all the way up to above 100 to 1, all the way down to in the 50s and 60s and 70s and 80s. Like it's fluctuating. Silver and gold don't move in the exact same direction all of the time. Oftentimes they'll both move up together or they'll both move down together. Not all of the time. Sometimes they move in opposite directions. Usually as they're moving in the same direction, they'll move in the same direction but at a different pace. See, silver might be up 3% while gold is only up 1.2%, or vice versa, which causes the gold to silver ratio to be bent in all crazy directions. But point being is that's when the cycle can continue. Use some of the cash flow to get more silver. And the next time I see an opportunity to trade some silver for gold, that's what I can do. And then I'll have even more gold, and potentially, who knows, in a perfect world, I would have more gold to get even more land, if that's what I still want to do at the time. Again, it might not work out for me, but that is what my plan is. It's just this big giant cycle. That's the way I'm doing things. That's the way I'm stacking. That's what some of my strategies are. It's not exactly an exit strategy. Again, I'm going to save that topic for potentially a weekend video. But I want you guys to head on down to the comments and let me know. Number one, everything related to the Federal Reserve probably soon beginning to taper, and it's probably going to last most of next year if I had to assume. But on top of that, what are your thoughts when it comes to trading one precious metal for the other precious metal? And if anybody's interested in joining the Precious Metals VIP Club, it's where I can do things on my own terms, not on YouTube's terms, my terms. I'm hosting privately held live streams. They're smaller and easier to manage. I'm posting exclusive VIP-only adventure vlogs. I also do giveaways, discounts, personalized promo codes, shoutouts, deal alerts when silver and gold is on sale on a variety of different websites. And of course, you can watch all of my videos early and commercial free. Come join the Precious Metals VIP Club. It'll be the first link in the description. You're invited. I'd be happy to have you. If you guys like today's video, please hit that like button. If you guys like me, make sure to subscribe. New videos every single day, 365 days a year. Also subscribe to my second channel, which is my backup channel for exclusive weekly content. Bunch of brand new videos over there. Go check them out. The link will be in the description. And if you want to help support the channel in the biggest possible way, please consider getting yourself some DYDSS merchandise. Of course, we have a ton of different products, a ton of different designs, t-shirts, hoodies, stickers, and coffee mugs. But for the month of December, up until Christmas, we had the limited edition DYDSS Christmas line. It's helping raise a little bit of funds and awareness for St. Jude Children's Research Hospital. So it's for a good cause. It's helping children with cancer. Any and all merchandise can be found by clicking the first link in the description section down below. Thank you in advance. It's more than appreciated. Make sure to also go and get your 2 free stocks by downloading Weeble. The link will be in the description. Just fund your account and you'll get 2 free stocks right off the bat. And then if you refer 3 friends before the end of the month, they're going to give you a spin on the Weeble wheel where you're guaranteed to win at least 1 free share of Apple, which at the time I'm recording the video, each share is worth almost $170 right now. And for every 3 friends, which means if you refer 6 friends, you get 2 spins. 9 friends, you get 3 spins. And you get a chance to win 1, 2, 3, 5, 7, or even 10 shares of Apple per spin. Don't pass up on an opportunity. Weeble link in the description. And I want you guys to head on down to the comments and let me know once again. If you can leave me 2 comments, the first one talking about the Federal Reserve and whether or not you think they're going to start tapering soon, or if you think rates are going to be going up soon and what type of an impact you think that that will have. And then in a completely separate comment, if you can let me know your thoughts on everything I shared related to silver and gold. Of course, do you have an exit strategy? Not necessarily because you want to get out of silver and gold, but if you ever needed to sell because you needed the cash, do you have an exit strategy? I know it's not really what we talked about in this video, but it kind of goes hand in hand with trading the precious metals for something else, if that makes sense. But of course, when it comes to gold to silver ratio, being about 79 to 1 right now, yesterday it was 80 to 1. The gap has really moved pretty far apart. What are your thoughts on that right there? Do you think it will continue moving far apart? Do you think we're going to see 80 to 1 again? Do you think it's going to go back up to potentially 90 to 1, which we haven't seen in a while? It's been, I believe, over a year since we've seen that. I remember maybe a year and a half, potentially even 2 years ago, it was over 100 to 1, which was crazy to me. But head on down to the comments and let me know anything and everything related to today's video topic. Thank you guys so much for watching. I'll see you tomorrow. And remember, don't you dare stop smiling. Peace.
We're breaking free!